Hello, hello, hello. Let's get into it. How are y'all doing? Make sure you slam that like button. You know what I'm going to ask. Today is going to be very interesting. There's one large mega cap tech company that I think is prime for some options profit for us to take and delightfully bask in over the next couple of months. We have some huge tech movement. We have some big S&P movement. We got some great volatility coming up. We're going to go through some options trades that I really like. We're going to go through an options trading strategy I've been using a lot lately that's been very beneficial. And then we're going to go through the small cap stock picks of the week. I think we're going to have another breakout opportunity on a very cheap name that is undervalued that is going to make us some money. We are going to do all of that and more. And at the very end, I'm going to save an additional couple minutes this week to go through the charts that you guys want to see. So please, please, please drop those in the chat. Slam them in now so I can get a look at them, and then we'll type them in later. So if you have a stock in particular that you'd like to look at on the chart together, drop it in the comments so that we can take a look. And I wanted to give a special thank you to all of you for coming yet again. Last week was a little off, given that we had to do it on a separate day. Choppy audio. You can't hear me that well? Can you hear me now? Can you hear me now? Can you hear me now? Can you hear me now or what? Board, you're supposed to be on top of this, man. Oh. Maybe it's connectivity. Can everyone else hear me? Type a yes in the chat. Help a brother out and let me know. Okay, no worries. So it is good. Looks like connectivity is decent because again, we have some huge opportunities that we're going to take advantage of. I think I have one that's going to be another multiple triple banger, a nice 100% plus options trade. If you are new, stick around. You are going to learn that options aren't as complicated as you think. For those of you that have been trading for a while and still feel they're that complicated, we're going to address that too. So don't you worry. Don't you worry, that sweet little head of yours. We're going to take care of everything just fine. I love it. We got 30, 40 people in here. Slam that like button. Let's get 30 and we're going to get started here. I got to get some engagement out of you guys, get you riled up, get you integrated, get you involved, get you excited because we are going to get into it. My wife hates this stream, but I absolutely love doing it. So if you could be a deer, be a doll, hit that thumbs up, just click it once for me. We got 35 of you. We just need 30 and we get started. Just to recap one more time for those of you that are new, if you're new and scared of options, fear not, no more, my child. We are going to show you the way. We are going to go through a couple of plays that are going to be Tobias. Let's throw this man some love, Tobias. First time here. I love it, man. I hope you stick around. We're going to be giving away some great stuff as well. On top of the knowledge, education, and alerts, we're going to be giving away a free membership, which will give you instant access to our daily stock options and crypto alerts, along with our full trading education package, which takes you from zero to hero faster than you can imagine. One by one. Rich, thank you, my friend. I appreciate you, my friend. I appreciate you very much. We just want to share the love, share the knowledge. It's not that complicated. Again, this is a tool of the rich, guys. They've been gatekeeping trading for the longest time, and I think COVID really blew the top off that, which is really how we got started. It's been a wonderful journey. I appreciate any and all of you that have supported us from the beginning. I know some of you have been here following us for years. I very much so appreciate that. Your support means the world to me. As always, it's an honor to have people listen to you, and to be listened to for me is a great honor, and I appreciate it. And I hope to reciprocate on that by sharing some stuff that makes you some money. I've seen a few of you crushing it in the Discord chat. I'll put that link in there in just a little bit for those of you that aren't in already. I've seen a couple of you commenting that you've been following the SPY analysis and making stupid money, trading it up and down, because again, we trade both ways. We're not sitting waiting. We got to have a bull market, got to have a bear market. We don't give a shit. We just don't care. What we do care about is that we get movement in the stock price, which gives us options opportunity. Fernie, first timer, what's up, baby? How you living? Again, stick around. We are going to be going through some options trades that will make you some money. We are going to be going through our small cap stock pick of the week for those of you with a smaller account that are still looking to make some money. Most importantly, we're going to be going through some options trading techniques and strategies that are absolutely going to make you some money. Trading strategies that have yielded me net this year so far just over 36%. I've been trading a lot more carefully this year, a lot more concisely, larger positions, but fewer trades. And I know some of you have been missing some of those trades, and I'm looking for some opportunity right now to put in there for the next couple of weeks, because I do think this next quarter is going to be primed for some options wins that are going to make us a stupid amount of money, guys. I really do. You've seen the NVIDIA trade. That's up 400%. You've seen that Netflix trade. We've taken net 120 at this point now, long and short. And some of the other trades have been exceptional. We got our Palantir swing. We got our PayPal swing. And we are watching, we got the PayPal equity swing. We're still watching PayPal for the option swing entry. And there are a few others that are absolutely primed and ready. Let's see, do we get that magic number yet? Just 2 more of you lovely people. Click that thumbs up. Give me a like. Let's get to 30 thumbs. 30 thumbs is up. And we'll get rolling here right into our first pick, which I know you guys are going to absolutely love. It's setting up in the chart and looks absolutely amazing, beautiful, delicious, delightful. We've got 30. Let's get into it. I love y'all. Take a quick blast because I will lose my voice at the end of this. So I love y'all. Thank you for being here. Let's get into it. So first one up on Slim Pickens. What's up, baby? How you living, Derek Phillips? Come on, baby. Come on. Not the Gatorade. Hey, man. Don't you worry about that. What we've got here, one of our favorites, the Jugal. We haven't traded it much, but there is some opportunity brewing here. Look at this beauty of a chart. What do we have? Okay, let's zoom out to the weekly so that we can get a very clear picture. We have Google on a steady uptrend for a number of years. Why? Because it's a great business, because they're cash flow positive. They're making a ton of money via Google Ads and a number of other verticals. And they're then the center of the internet, right? So center of the universe. We've got our long-term standing trend line here. We saw some breaks, then we saw it push up, and then boom, post-split adjusted price. If you don't know what that is, it's basically where they combine a number of shares to make in this case, they break the shares open so that one share equals, 4 shares or 5, and they adjust the price to that. So if it was 1,000 shares and it was 10 to 1, that means each share is going to be worth $100 now. So makes the stock more affordable to people that want to buy it, which is it's a good sign. Reverse split, not a good sign. Not a good sign. So we pushed to our high of $152. This is the story of a boy who climbed up a very tall hill and lost his footing down to what he thought was stable ground. Little did he know that ground would soon fall and crumble. Volatility would enter. Into his mind, he began to question, can I make this voyage? The answer is yes. He can and he will. His name is Google, a young boy. Google, a boy's tale. This chart is absolutely Rich Sanks. Come on now. That chart is absolutely prime, my friend. If you take a look at this long-term chart, we're on the weekly chart here. For those of you that are new, using the longer time frame charts gives you a much better picture of what's actually going on long-term with the stock price. You can trust those support levels more. You can trust those resistance levels more, and you can make a better play, take a better position on better data if you're taking a longer term view of the chart. So again, these are all the number of years that Google's been in existence, right? So if we're on the weekly and we see strong, steady uptrend, we got a huge push up. Google reached all-time high, sank down, found support on that same trend line. Look at that trend line right there. That matters, guys. Trading is not that complicated. People want you to believe it's that complicated, but surprise, it's not. If you can learn to identify little simple ranges, like this is the high, this is the low, and then within that range, draw the support and the resistance, you can trade. If anybody told you else otherwise, then they're an idiot. So I told you, you're welcome. And if you're hearing this and you're like, dude, yeah, okay, man. Okay, guy, Mr. Guy, I'm going to show you exactly how, because that's exactly how I taught myself how to trade a number of years ago. It's exactly how I've taught thousands of people to trade. For those of you in the Discord, I will drop the link because I know I saw a few of you type it in there. Let's put the Discord link in there. Free trading education all around. So just type that link into your browser, discord.gg/pennyboys, and you will get instant access to the Discord. We have free weekly watch lists, free daily watch lists, free options trades, free stock trades, and a trading education course just for you. I love you. I want you to make some money here. Don't buy anything. Don't spend any money. Just make some money, and then we'll talk. I don't want anyone to feel sold. So we've got this long-term trend line on Google. Great thing. We got this huge push on Google. Not great thing. Why? Because money was cheap. right? During COVID, they just were printing money like it was nobody's business, which gave businesses the opportunity to not only get PPP loans, which are basically here's some free money, you don't ever have to pay it back. And it was also very easy to finance because interest rates were in the gutter. When money is cheap, tech companies thrive because they're all based on the future, right? And they are just cash burning machines. So when money is cheap and they can borrow and leverage at a super low interest rate, they are going to absolutely rip in the stock market. That's why you'll see something very common. When you see interest rates come down, you see tech go up. Basically anything speculative, but specifically tech. So long-term trend line here on Google. And then came 2023. We go back to the daily chart. So we were on the weekly. We're looking at the daily. We're looking at a smaller view, a more micro view, right? So we had 3 bounces on that trend line, the third of which barely touching the trend line. Can you guys see that right there? Very important to identify the strength of these bounces, right? On the first one, came below the trend line, not great, but not terrible. Second test, just below the trend line, but higher low, also an indication of an uptrend. The third time, higher high right here, and then also consequently a higher low. Anytime you see a higher high and a higher low, you can pretty much assume on the daily chart at least that you are looking at an uptrend or a reversal if it was downtrend and then up. Very important to know that very simple thing because that will give you an edge in trading reversals and trading anything because the hardest part with this, people are like, well, I don't know when to buy and sell and blah, blah, blah. First of all, if you're in the Discord, you know that we give you those alerts with the entry, the exit, the sell targets, the analysis, and the chart all at the same time so that you can make the most educated decision and make money, right? That's the whole goal. You're here to make money. So let's show you how you can make money on Google. We've got our trend strength. Great. We've got our moving averages here. We've got our 200-day in this bright, beautiful green, right? This lime, delicious green here. That is our 200-day exponential moving average, which means that over a 200-day period, this is the average. This is great information. Why? Because again, just like the chart, when we look at a larger scope, our larger view, a longer time frame, we get more data points, which gives us a much clearer and trustworthy. That's the important point. Trustworthy picture of what's actually going on with the stock price. These shorter term moving averages that you can see here in blue and in orange are your shorter term moving averages. Okay, what's the difference? Again, shorter term moving average has less data input, right? Fewer data points involved, which means you can't trust it in the long term. For short term reversals, short term breakouts, short term bear breaks, you can trust it. But what we're looking for here is a 10 banger. We want at least 100% return on this, right? Like I want an options play that I'm going to set, forget, and feel delightful about as I'm sitting home enjoying a nice bubble bath, just thinking about how much money I'm going to make. And I'm sure that's what you guys want as well. I would hope so. I would hope for at least that. So would you, let's in the chat, would you love to be sitting in a nice, delightful bubble bath, watching an options trade up 100, 200% while you're relaxing? Wouldn't that feel nice? Tell me that wouldn't feel nice. I want to hear from you, great people. I want to hear from you, fine people. Would that feel nice? Yes or no? Let's hear from you. So we've broken above this longer term moving average right here. Again, indicated by the green line. What does that tell us? That Google has strength right now. That is a very firm resistance right there, yet it was able to break above it. Let's also look at what we have, right? We talked about our 3 support points. What about our resistances? We've got one here, right, at about 102. I'll draw right here so you guys can see it. We've got one here at 102. Then we've got another one here at about 109. And now we've touched just a bit higher at about 110. So what we have here, and this is very important, this is this very important lesson. This will save you a ton of money as you trade. I promise you, this will be one of the simplest but impactful things you could ever look at on a stock chart. We have our low number 1. Oh, I should have just drew a number 1. Well, there. Now it's a number 1. We have low number 2. And we have low number 3. And then let's mark these. This resistance 1, resistance 2, resistance 3. Someone tell me, what do you see here? We just talked about it. What do you see here? I'll wait. Type it in the chat. Let me know. I want to test your education and engagement. I want to know that you guys are paying attention, that you're comprehending the material, because if you're not making money, then there's no point in any of this. There he is. Higher highs and higher lows. And also uptrend. Yolanda, also correct. So we have low number 1, low number 2, low number 3. So what we have are 3 lows, right? Getting higher. It's stair stepping each time. So we have a low, higher low, higher low. And then look at the highs. There, it's confluence, guys. We want to see points that intersect, data points that tell us the same story or validate the story that we think in our heads, right? Again, we always talk about developing a thesis on the overall market and then dialing into that thesis to create a plan as to how we're going to trade it. So we've got higher high, even higher high. We got higher low, even higher low. Confirmation that a reversal is very, very likely. Not imminent, but likely. That matters because we need to be certain as we can, that what we're looking at is correct, because then as we build out that trading plan for each stock, right, for each ticker, for each chart, we're making sure that not only are we trading with the trend, never against, but also that our trade fits within the bounds that we have on the chart. So for example, that's how we looked at, when we look at this chart, that's how we're able to tell, okay, we're starting to see a reversal here and we're starting to see an uptrend here. Now let's look at where we would secure our entry, because that is the second most important part. You don't need to, we don't want shotgun spray. You don't want to be, this is how this, trust me, this is how traders get destroyed. This is the number one reason that new traders, board, mark this down, this is a good one. The number one reason that new traders get destroyed in the stock market, shotgun spray. Instead of sniping an entry, setting a stop, and having a properly calculated risk to reward ratio, here's what they do. They start guessing. They start engaging in FOMO, wondering, am I going to miss the entry? So as Google's running up here, they're like, oh my God, I got to buy it now. It's going to break out. This is crazy. It's already been breaking out. It's been breaking out since 90 bucks. So buying right here is not the move. It's just not. It's not a good trade. There are better opportunities. So how do we pinpoint our entry? Well, we start by trying to look at what is the range that we have in front of us and where can we hope to get entry. Remember, a range is where support and resistance find each other, right? We want to find a nice range that seems to be confirmed by the price action, meaning we've seen support bounces on the support and we've seen resistance touches on the resistance. If you look at almost any stock chart, you should be able to identify some sort of range. So if you look at this as a range, right? 117 and 105. It's just bouncing up and down. Do you know how many different trades you could have taken right here? You could have taken probably 30% per options contract up, then 30% on puts, 30% on calls, 30% puts, 30% calls, 30% puts, until you have a compounded average of like what, 300-400% on a couple of 30% wins, right? Because you're trading with more money each time. Then if we identify this as a range right here, very simply, here's the top, 102, here's the bottom, 90 bucks. 30% on the puts, 30% on the calls, 30% on the puts, 30% on the calls, 30% on the puts, 30% on the calls. I hope I'm making myself clear here as to how easy this truly is, how beneficial this is, how important this is to truly understand the core tenets of what we're discussing here, which is just simple. Honestly, it's like, in my opinion, this is simple enough that an 8th grader should be able to say, hey, look, that's a range. That's the top. That's the bottom. It's just puzzles, fitting patterns. Do the patterns fit visually? That's how I like to do it. I like to understand it visually first, and then I go back and see if the data confirms the hypothesis that I have, right? So if my hypothesis is Google likes to trade between 2 ranges, one of which being $90 to $102, the other range being $106 to $117, right? So this is a $10 range, and this is about a $12 to $13 range. That is also important, because if we can identify that Google has these little $10 to $12 ranges it trades in, guess what? Somebody tell me. I want to see a guess in the chat, because I know we're absolutely crushing this right through here. What does that tell us? If we know that there's 2-3 ranges where it's moving $10 to $12, what does that help us do as options traders? I'll wait. I'll repeat it one more time. if we can identify that Google has $10 to $12 ranges where it goes up and down in this $10 to $12 range, and we see that this range, this range, this range, they're all $10 to $12. What does that give us as options traders? When we're looking to execute and build a trade, what does it tell us? If you look at what is an options contract, right? Just simply, calls, very simply put, the opportunity to buy a stock at a certain price, right? So it's basically a bet on the movement of the stock in a sense, right? But it's a little more complicated than that, but I'm trying to keep this simple. But you're essentially trying to buy low, sell high. That's what you do with calls. And then with puts, the same idea. If you go short, it's the other way around. There we go. Sergeant Brando Duco. It tells us, no, you know what? A few of you are right. Tyler, you're right. Duco, also right. It tells us our entry point, and it also tells us our strike price on the option that we're buying. So it tells us what option to trade. It also tells us when we need to enter. And this is also correct. 1 up 10, we can expect a reversal of 10. So that's important. Here's why. If we just hypothetically, I don't want to confuse anybody. Let's just hypothetically say, right, that Google tends to stick in that range. It moves $12 at a time, 12 up, 12 down, 12 up, 12 down until a breakout, right? Because it doesn't stay like this forever, guys, right? Because it moved the $12 here, right? And then it came down from 117 all the way down to 83. Obviously, that's like $30 move 3 times, right? So we can't assume that it stays like that forever. But here's why we need to know that. When we can identify this range, what we can do is take very calculated, low risk, high reward trades, right? That we have the entry for because we've identified the range. Look at it on the chart. I'm zooming in here for you guys. So if we know that this is the range, right? And we're trading this right here, and it comes down to, 105. Comes up, and now we're here, right? Let's say we saw it come down to 105, and then it went up to 117, and we say, you know what? I think there's a range forming here. That means we could secure an entry at 105, 106. We would be buying the 115 to 117 call. So if we assumed that this range was going to continue, we wait until we get bottom, and when the stock is at $105 a share, we are going to buy $115 to $117 call, right? Because we are speculating that the price is going to rise to that strike, right? Because with options, if we buy a strike that's currently above where the price is now and the stock hits that price, that options contract will become far more valuable than if you were just buying the shares independently, right? Options move a lot quicker. So for instance, you could see a 10% move in the stock price, but that options contract can be up 100%. It gives you leverage. That's what you're getting with options. You're getting the leverage of trading 100 shares without having to have, obviously, thousands and thousands of dollars in one position if you were buying 100 shares of Google. Extremely beneficial, right? Because you'd have to spend 10 grand to get 100 shares of Google. Rather, if you have an options contract worth $200 or $300, you spend a fifth of the money to get the price action as if you had 100 shares. It's a beautiful thing if you do it right. And that's what I'm trying to show you guys, that there's a very simple way to do this. And I'm sure there are some of you that have probably paid $5,000, $6,000, $7,000, $8,000 for like a 2-week course that probably taught you exactly what you're learning in the stream for $0. So what can I say? I'm just a nice guy. No, I just love you guys. I love doing this. It's an honor to be on here. It's an honor to be listened to. It's an honor to be heard by you guys. And I very much so appreciate you guys taking the time out of your day to come here and learn. Well, there you go. If you're not in the Discord, the link's at the bottom. Mr. Slip, Mr. Stock Lock Profits, he alerted this a month ago at $94. Looks like he was waiting for confirmation of the reversal. Look at this. That man's a G. So he was watching this chart, right? And we hit a higher low again. So he said, you know what? This is looking good. Look where that resistance was that it needed to cross. Just about 96, 95, 96 bucks. Oh no, that was a gap up opportunity. So it would have been about 93, 92. So 94 was a crisp entry. Crisp entry. Hats off to you, mate, Mr. English. Great trade. Great trade. So again, we've got our Google chart here. Okay. Very important. I'm going to pause for just a moment. Pause for just a moment. Is everyone following along here? Just for 1 second. I just want to check in with you guys. Is everyone following along? Does this make sense? Just a yes or a no in the chat. If it makes sense, type the letter Y. If it doesn't make sense, type the letter N. And please, if you're not following along, please just say no. My goal here is that you all leave here feeling more confident and more comfortable trading options than you did when you got here. So that helps me accomplish my goal. So I ask that you guys can just simply type yes or no and tell me whether or not you're following along. Let's give a little business shout out. For all of your HVAC needs, contact Burroughs and Company. There you go. There's a free promo, my friend. I don't know where you are. It looks like maybe New York. Is that Statue of Liberty I see in that picture? Feel free to plug the location there. If you need, for any HVAC and appliance needs, please contact Burroughs and Company, a family company. Boom, free business promo. I'll invoice you $100,000 for that. Just kidding. Tobias, rearing to go, my friend. We're not talking about that yet. We will get into that. We're going to look at a Google. We're going to look at a Google options trade that I think is going to be pretty tasty for the next couple of whiles. All right, looks like we've got a lot of yeses, but we have like 50, 60 people here, and I only see about 20 responses. So come on, guys, hit that. Come on, I want to know. Just check in. Is it yes or a no? If you don't, please don't. If you do, please do. Just give me a yes or give me a no. And if you haven't yet, if you've learned anything and feel like this has benefited you all, please hit that thumbs up. Just hit the like button. There you go. Dave plugging for me. That's my guy. I appreciate you, my friend. Please hit that like button. It supports us and helps bump us in the YouTube algo so that more people can see this information. So everybody's good. Demetrius, appreciate the honesty, my friend. What I'm going to do for you, we're going to hook you up with the free 30 days in PBU, my friend. We're going to get you on the right track. So if you can get a hold of him, Demetrius, drop your email in the chat, buddy. We're going to send you an email with a trial code so that you can check out our trading education stuff and get a free run through so that you can get a better understanding of this and start trading some options with us, buddy. So just drop your email in the chat and we'll pick it up and shoot you an email with the information to get up in there. I'm glad you're here, man. That's the ticket. That's the ticket, man. Every single one of us started off as somebody who had no clue what the hell somebody was talking about looking at these charts. To be honest with you, I don't even know how I learned it. I'm obsessive and compulsive, so that's probably why. And I'm very analytical. I like patterns and math, so I'm assuming why. That's why I love it. But I think that this is the single greatest tool. Like, as I've always said, and those of you who've heard it many times before, trading, in my opinion, is the only business you can start on your own with minimal capital, minimal time invest, and minimal startup cost as far as training and whatnot. It is a business if you treat it like such, meaning it is an opportunity to take the money you earned so far or are currently earning at work and turning that money into more money without exchanging dollars for hours. That is the pathway to wealth, my friends. You need to be making money when you're not looking at something, when you're not paying attention, when you're playing with your kids, you're on vacation. If you're still making money and you're on vacation, you have made it. You have made it. It's not all about money, but money is a tool that gives us access, gives us freedom, gives us services, gives us things we want. It gives you time with your family, time with your friends, it gives you vacations, gives you a nice beer on a Friday night, it gives you whatever you want. You need money to buy it. And to be very honest, people that are financially stable often have higher self-esteem, are more comfortable in their lives, tend to have more successful relationships because no one should feel financially insecure ever. That's the whole reason we're here, guys. Because this information has been gatekept by the rich for all time. Honestly, until COVID really, I think, popped the bubble where everyone started waking up and realizing that there's something going on here. Why can't I do this? And I've seen a ton of you do it. We had a mom who was pregnant. Just got pregnant. She turned $1,300 into $2 million trading options over 2 years. Insane. Now that's a results not typical, but it shows you that it's possible. The more normal stories are seeing the people that had 5, 10 grand to start with and have about 30, 40 grand now over a couple years, right? With long-term trades and short-term trades. My strategy has always been short-term trades, grow your capital in the short term, right? They grow your gunpowder. You move that money as it grows so that you're trading with the same amount. You move, if you're trading with 5,000, you turn it into 10 grand, take 5,000 of those profits and roll it into long-term trades, long-term holds, so that you continue trading with that 5 grand until you're so comfortable trading with 5 grand that you're ready to trade with 10 grand. Because I will tell you something. I was a hell of a lot better trading with 50 grand than I was with 100. Because I didn't fully understand how to size my positions at 100 with $100,000 account. I struggled to size the positions efficiently. So then I figured, okay, I'm just going to do the same allocation. Instead of having 5 or 10 trades, I now had 20 open trades. It became too much to manage. So then what did I do? I started taking fewer trades, but larger positions. What did that do? It created more stress. I was more anxious. My life was kind of miserable, to be honest. And I started losing trades because I would panic when I saw a little dip, even though my analysis told me that if it stays above this price, the trade's still good. I would get scared. And because I knew I was going to be busy or I couldn't watch the next day and I didn't trust the stop loss, I just wanted to get out of then right then. And then I had to watch the trade rip 200%, and I'm not in it. Worst feeling in the world. Scientists have stated that it's actually more difficult to watch a win that you could have had than it is to lose yourself. So let's get back into it. Fernie, I'm glad you're here, my friend. Please take advantage of the free resources available. The link is scrolling across the bottom. That's our Discord chat room. It's just an app where people go on and chat. There's other live streams, other live events, live trades are posted. There's a community in there of other traders that are just trying to help each other get put on. You know what I'm saying? So if you're new, I would start there with the trading education course. We offer PBU. If you want to check that out, you can check it out here. I'll type the website there. It'll be the best investment you've ever made in yourself. Just like you'd go to college to learn how to run a business, you come to us to learn how to trade. Except the cool part is that it doesn't cost you much. So, looking back at this Google chart, we've identified a few things. Let's recap them. We see a reversal, pending reversal right now. It looks very good, but again, pending. We see stronger price action moving up, dating November to current. We see higher lows forming. We see higher highs forming, which tell us, okay, I think we have a confirmation of an uptrend. But here's the only thing that's holding me back right now. Look at this RSI here, right? We look at this the same way we look at the stock. We look at the price of the stock, right? The same way we look at price action. So here are some of the peaks in RSI. Price is at 101, RSI on the 9 days at 80, overbought, comes down. Price goes up to 110 almost. RSI is only at 77, overbought, comes down. Comes down even further, almost goes to oversold. So what we see here is confluence then once again, lower price action low. RSI was at 29. Slightly higher low. RSI is slightly above where it was previously. Now, the question is, why do we see RSI topping out here at about 78 as price only goes up to 107? And then once more, what's more, price is at 109.60, the highest it had been in the last couple of weeks, yet RSI is only at about 73. And here's the other part to be very mindful of. Volume is thinning out. We talk about this many a times. You knew I was going to ask it. What does volume tell us? Volume always precedes what? What does volume always precede? You've heard me say it. Bing, bing, bing. Volume always precedes a change in price. Casey Page for the win. Well, a bunch of you got it now. What that means is when we see an uptick in volume, it means that we are going to see a change in the price. Whether that's up or down, we have to look at the price action to determine that. However, we know that a move is coming and that it's probably not going to trade flat. So that gives us incredible opportunity with options trades, right? Because the reason options trades are beneficial is because you can get a much higher return on a smaller move in the stock price because you're leveraged. So with this RSI kind of dwindling here, with volume tapering off here, even though the chart looks beautiful, and this was to illustrate a point, everyone was foaming at the mouth. This looks so good. What's the entry? What's the entry? What's the entry? What's the entry? This looks great. It's not ready. It's not ready, boys and girls. It's just not. There's too much information here telling us that we're going to come down before we move up again. That entry at this current point in time would not be prudent. I don't think that would be the smart entry. Even more so, we'd be basically buying in the middle of this range. And you all know there are a few things I hate more than buying in purgatory. We've got the top and the bottom of the range here. Why would you want to buy in the middle? It doesn't make sense. It's improper risk reward. No. I disagree. I mean, do what you want. But this is also not the opportunity to buy puts, in my opinion, because you're going to get what? A $2, $3 move? I mean, if you're an expert scalper and you can get in there and you can take a quick 5, 10%er on a large position, by all means. What I'm talking about here is I'm speaking from the reference point of a newer trader, of a swing trader that's not going to be able to stand there and stare at the chart really intently and make a very well executed pinpoint move for a scalp. We're looking for big banger trades. So what we're going to wait and watch for with Google, here's the plan, friends. Board, this is a timestamp moment. Here's what we're going to wait for on the Google trade. First, we want to see, can we get a little bit higher? I'd love to see 110, 111. Not calls. I just would like to see 110, 111. The middle of this previous range. Let's see how the price interacts. Why? Because if you look right here, we had 1 day, right? Bearish to 112.62, which looks to be, if you go and map that out with your fingers, right? We've got resistance here, 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 here. So we can justify this as a potential resistance that we are going to face in terms of the price, right? Let's go back and do it again. It was support here. Then it became support again. Then it became resistance. 1, 2, 3, 4, 5, 6, 7. Support again. Support, resistance, 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 support, resistance. Very important line, right? It means that this line right here is a critical price point that if it breaks above and holds, it means we're going to go up. If it can't break above, it means we're going to come down and retest the bottom of that range. So what we'd be waiting for on this Google trade is very simply a touch of that line, maybe 112.60, 112.50, and then we want to see price come back down and settle just above this moving average. So if we get to see price, I'm gonna get rid of this just so that you guys can clearly see what we're talking here. I'm gonna get rid of a lot of these just because then it's easier to see. So this is what we're waiting for. I'm gonna zoom in extra close so you guys get a good view. We are waiting for Google to come up and test this right here. And what we then want to see is a rejection, and we'd like to see it come down and probably, best case scenario, test this 200-day moving average and hold, meaning we want to see a support test where it hits that price and rejects back up. That's our entry point. That is the smartest, most secure entry point for a trade like this, meaning you are maximizing your reward, but you are also minimizing your risk, and you are sniping an entry. We don't want shotgun. We want sniper rifle. So for Google, once again, we would like to see price appreciate and go up to about 112.60, come back down and test this green line, the 200-day EMA. You can easily set this up on your chart so you can follow along, or 105. So between 103 and 105, we want to see it hold, hit, support, hold. That is our entry point. So now what would our targets be? Is it going to be 112? No. We're going to target a little higher. We're going to lower our cost on the option we're going to trade. We're going to also greatly increase the profitability of that trade. So our first target is going to be the top of the range that we identified here at 115 to 117. So if we're buying at 103 to 105, that means we're getting a $10 move, 10% move on Google stock price, which means that we're going to have a pretty substantial move on the options contracts we're trading. As far as the expiration date, if you don't know what that is, once again, click the link at the bottom, take some of our free options trading education classes, and then you will understand. If we are taking this entry on that options contract, we are going to be looking for, if we map this out, how long does it typically take Google to move $10? Well, these are days, 11/4, 12/1. So about 30 days for it to move that $10. And let's look at on the downside. So this is the second, 27. So between 25 to 30 days is typically what it takes for Google to move, $10 plus. So we could estimate that we need at least that amount of time in terms of expiration, but we want to be safer than that. We want to be smarter than that. We would be looking about 3 weeks to 1 month out on this expiration, right? So like in theory, if we get this move right about here, which would be kind of end of April, we'd be looking at a late May, early June expiration. We'd be buying it at 103 to 105, and we'd be taking the 115 strike price. I think that this will move back up and over that period of time. Now, to be very safe, to be honest with you, sorry, I just did the math in my head. If it takes about roughly 30 days, then we actually want to double that because we don't want the time decay, theta, the T, we don't want theta to depreciate the value of the contract. So basically means the closer you get to that expiration, the more risky it is. So what does that do? It lowers its value if it hasn't hit that strike yet. So we would realistically probably buy 2 months out. If that's too expensive, here's what you can do. You can buy to open the 115 call for that expiration, which would again be late June, early July. And you can sell the 115, 116 call, same expiration, which creates a vertical debit spread, which means you will only lose as much as you spent in opening the contract. If you need help with that, that is a question to be handled in Discord because we are in there answering one-on-one questions so that you guys know exactly what you're doing and how to execute these trades the right way. So that is our Google play. I think it's going to be a phenomenal play. I think there's a ton of upside here. I think realistically, if it rips, we could see 123 again, which would be even further than our expected move. And best case scenario, at that time when we're looking at entry, I'm also going to be looking at some longer term. There'll be a lot more expensive, but some longer term options trades targeting 130 to 140, which I would probably put at least a year of expiration on just to be safe. Because again, tech may be rebounding. However, we're in a very volatile market. So let's dig into the SPY, which we can get a little deeper into because that's going to give us a more general broad market outlook. So we had on Friday was the market close. I can't remember anymore. I don't know. I can't remember anything anymore. No, I don't think it was. On Friday, we had some bearish neutral action after a very strong day on thin volume, but still a strong day. We really liked the volume we saw right here. If we go back in time, we could see that the volume on the S&P right here between 382 and 390 was the strongest it had been over a 3 or 4 day period since back in January of 2022. That is a very good sign. That means that money's coming back in the market. People are feeling more comfortable and a little more confident that we're going to see some move to the upside. So again, we talked about this inverted head and shoulders forming here, with this being the final shoulder and the springboard point. And then we talked about this right here being the neckline that we need to see it break. It broke above and it's holding above. But what I'm waiting for here is for it to test this resistance right here. Stretch this out so you can see a little better. So we've got resistance coming up ahead of us, right, at about 416, 417. We talked earlier in the week about seeing 415. That was our target. It hit. What we could then see is a test of this resistance at 417 or so, and then a little bit of pullback. I still don't think that's a good trade to take because it's such a tight range. You're not going to get a lot of price action. You're not going to get good price action with strong volatility, which is the best way to make money trading options. You're going to get a small movement and small appreciation. So again, if you're a very skilled long-term trader that knows what they're doing and can snipe these entries and scalp these trades, then that's for you. But if you're looking for the longer term swing plays, a little more easy breezy, or you're newer to trading, I would suggest that you listen to what the following. When the SPY breaks above this line right here, this bright blue line you can see in front of you, right? Which I've identified as its near-term resistance. We could then see a test of 430. This would be a trade I'd take. At 415, I would take 430 calls, right? Once, as I've said this a million times, SPY's critical point is 430. If it breaks above 430, we could go back into price discovery mode and possibly test 500 bucks. Very optimistic, very bullish at that point. Very, very bullish at that point. But we're not there yet. So over the next week, I will mostly be watching. We had our for those of you who took that type it in the chat. Who took that credit spread I put out that crushed? Who took that credit spread? If you took that credit spread, let me know in the chat. I'm very interested to see who, if anybody, took them. I feel like nobody really takes those or follows them or comments on them, so I never know. Your guys' feedback is what helps us kind of adjust the trades, just so you know. So more feedback is better. When you tell us, hey, I really like that trade, that was really easy to follow, that really made sense to me, I liked how you explained this or explained that, or I wish you would have explained this part a little better, a little more thoroughly. Guys, that tells us what to do and what you need. At the end of the day, you're the one that's here looking for this. We need to know what you need and what you want so that we can give it to you. That's the point. That's the transaction here. So for those of you that feel uncomfortable giving feedback, please don't be uncomfortable. Just give the feedback. We're asking. There was a credit spread you missed, my friend. I saw somebody type something in the chat about it the other day. So I was just wondering if anybody took it at all or if they didn't. So yeah, that's what I would do too. If you missed entry, I wouldn't look at it again. So what I want to see next is a test of this 417 or so. I'd like to see a little bit of pullback. I think we're going to settle right around 408, 409, as we indicated as that touch point last week. And then if we settle at 408, 409, the 415 call is not a bad play. Give it at least 3 weeks expiration. That's a good play. But once we break above this line right here, I really think that we're going to be pretty optimistic to retest 430. Should be our first target, 425, 430. And then inevitably this red line, which is our big long-term resistance, used to function as support. I think this is kind of a big pivot point along with 430 as the strike on the SPY, where we will really see some movement to the upside and downside, and a lot of money will start flowing into the market again in the direction of the trade we will be taking, which means it will appreciate simply as a result of supply and demand. I lifted too hard yesterday. My neck hurts so bad. All right. Is everybody following along so far? Talked about the Google trade. We've gone through the SPY trade. We have a small cap breakout trade to discuss. I'm going to go through a quick trading strategy that I think you guys will find very beneficial and will make you some money. Does anybody have any questions before we continue? Please ask them now in the chat. If you don't have any questions, just simply say, no questions. Hey, Dad, we don't have any questions, so it doesn't matter. Any questions, please type them in the chat. I've had the Doug theme song in my head for like the last couple weeks. Especially the end. Okay, that's a good question. Google earnings is coming up. Let's look. Let me take a quick peek at the NASDAQ. I want to see what the earnings predictions are. Google, Google, Google. Where are you, Google, Google? Okay. Let's look at Google earnings. Google earnings. One moment, please. Wow. So their Q4 2023 earnings are expected to be pretty substantial in terms of growth, almost 40% growth from current. So it appears that Google tends to fade to the downside and earnings disappointments. It recently got downgraded. Very interesting. Okay. Very interesting. So, in looking at what I just looked at on the NASDAQ, it seems that they've missed on earnings, the last 4 earnings, which I think is pretty let's dividend. We're on the SPY. Go back to Google for just a moment. So, in the past, run up into earnings, sell off after earnings. Run up into earnings, sell off after earnings. We can anticipate a very similar move in their upcoming earnings, which will be reported on 4/25. So, what we're seeing right now is probably the run up into earnings. That is perfect. Would you not? God, look at that. That is just a treat. That's a dream. So we just estimated end of April for this position to hit our entry. We did that solely based on looking at the price action and the analysis of the chart over the last couple of months. What we didn't even consider, but is confirmation that we are on the right track, was that every earnings, the last 2-3 earnings where they've missed or expected to miss, run up into earnings, sell off after earnings. What are you looking at right here? Earnings is coming up right here. We're looking at run up into earnings, sell off after earnings. How delightful is that? Can we get some round of applause for everybody here? Because I'm not going to lie, that's pretty cool when that happens. That is just confirmation from above that we are exactly on the right path. Hit some emojis. Give yourself a round of applause. Give yourself a chance. Give yourself a shout out, guys. Give yourself some love that we figured it out. We nailed it. We crushed it. This is the heavy earnings week. You're absolutely right. So there are going to be some very interesting trades coming up here. So to answer your question, Tobias, we're not worried about Google earnings. We're just going to trade Google earnings the right way. We're going to wait for the run up into earnings. We're going to get the sell off after earnings, which also, here's the best part, implied volatility will decrease more than likely after earnings, meaning that we get a discount on all of the options that we're going to trade. Beautiful. Wonderful. Wunderbar. We've done it. We've done it again. Look at us. This is so us. I love saying that to my wife. She just looks at me like an idiot. This is so us, especially when she's mad at me and we fought. That's the best time to say that. This is so us. Yes. Yes. You're welcome for that. So we've nailed Google. There's nothing really to talk about until after earnings, because that's when we're going to get our sell-off. We're going to get our discount price, and we're going to watch for our support test at 102, 103, 102 to 105, at which point we're going to start to load up on our 117 call. Not 117. Yeah, that 117 call. 115. That's a little safer because you know that's likely to hit. The 115 call, we're going to give ourselves at least 2 months of expiration. And we're also going to probably load up the 130 calls with about a year or more of expiration on them for a potential run. If anything in the market changes, guys, it's an important reason for you guys to be here every week, because something may change in the market that changes this plan. We're going to move with the flow. We're not going to go blindly into these just because we decided it so. We are going to take what the market gives us, take in all the data, make a prediction, calculate what we need to do, and then execute. That's how we make money at this long term. Holding and hoping or sticking with a thesis is the dumbest thing you can do. One of the smartest things I've ever learned in the market is that you're always half right and you're always half wrong. You never have the full picture, and you probably never will. But that doesn't mean that you can't have a very well executed trade that makes you a significant amount of money if you're willing to be wrong and cancel and kill that trade when it's not going the right way. Because guess what? There are 30 other trades just waiting to be taken that have a very quality risk reward ratio in place that you will make money on. Don't get married. Don't get attached. The trade don't love you back, man. You can write that down in your notebooks. The trade ain't never going to love you back. Never. Oh, my neck. Jeez. So that's Google. We've done SPY. Let's move on. Let me pull up this small cap stock pick because that's going to be. This one could be good. I don't know, though. I don't know if I like it. Give me a moment. I don't know if I like that. Oh, this one's very interesting. Hey, look at the chart. Whoa. Would you looky there? 77. Wow, from 56,000 to 77 million shares. Insane. I bet this one was all over social media. But this one still could have some room. Let's take a quick peek here. This could still have some room. So this one could still have some room. I could live with this. I like this. Whoa, that's a scary chart. That is a scary chart. Whoa, as high as 852. Crazy moves. Let's go to the 4-hour so we get a better look. Let's get a closer look. Okay. So if we zoom out and we look at this weekly chart first, right? This ticker, I'm going to put this in there. This is the small cap. This is the small cap stock that we're looking at right now. PTPI, Petros Pharmaceuticals. Yes. This is what we're looking at right now. We're on the weekly chart. We saw a psychotically ridiculous uptick in volume, right? Like unbelievable from 55,000, 200,000, 34,000. My God. So this thing was trading at about $2. So basically this was trading about 60 grand a day, total net volume. This day right here, 77 million times $4 or $5 a share. This is trading hundreds of millions of dollars from one day to the next. I don't know what happened. If someone can scout up what happened with this one and pop it in the chat, on them, obviously had some news, right? We don't care. We're just looking at this as we're looking at this as an opportunity to play the chart. That's all we care about. So we're on the weekly view here. Here's what's positive. We're above the 8-day and the 13-day EMAs. That's great, which means that we could still see upside. However, we are below the 200-day, which is still fine because, again, this is a recent IPO, so it's still, in a sense, in price discovery mode. This is high risk. This is risky, so disclaimer, take it for what it is. This tells us that right now it's above the price it needs to be to continue moving up. That's good. Now let's look at the daily. Here's what we need to see, though. We saw it push to 850 plus. We could see a potential upside of 10 to 12 bucks total, right? Which would be 100% from here. But, very important but, look at this confluence here that tells us that this is a very critical resistance for a breakover. Over 513 as a momentum trade, this could break out and continue to $8 or $9 again. If the volume's there, I would assume that it's going to probably have some carryover volume, but be very careful when you have huge days like this. That is such a psychotic uptick, though, that I don't see a world in which this doesn't have substantial volume going into tomorrow. We have to see this break above 513 to see any upside from here. I would take this as a momentum trade, a breakout of 515, trade to the upside, look for 10, 15, 20%, set a trailing stop loss or set incremental stop losses, just so much as you can dollar cost average into a position, meaning You buy a little here, a little here, a little here, and you average it all together. You could do the same when you sell. So if this thing booms like it did the other day, right? It runs up and it hits like $6, sell half, and it goes up and hits 7, sell 30% more. You have about 20% left, then sell 10%, 10%. So guess what? When it drops 50% from 7 or 8 down to $3 or $4, you didn't leave all your profit on the table. You made a killing, and you have a little bit of that trade left for more upside. We're not buying more. We're just riding it out. We have to see a breakout over 515 for any of this to happen. If you see it, I think that would be a great trade with a very tight stop loss to take, where you could see $6, $7 on the upside, meaning you could see 30, 40, 50 to 100% ROI on this trade if it breaks over 515. Why do we choose 515? Because that's the point of confluence between our 200-day moving average and this range right here. This seemed to be a pivotal support and then resistance that price engaged with, which means that buyers and sellers, this is the midpoint of tug of war. Whoever pulls the hardest is going to win. So when the sellers pulled the hardest, it went to the downside. When the buyers pulled the hardest, it went to the upside, went up to $6. This could be a phenomenal trade. Just one I wanted to put in front of you from the bullish crossover filter. Now let's go to my swing filter and see what we see there. Oh, PTPI is also on my swing filter, so I'm going to screenshot this for you guys. This is beautiful. So if you took everything, feel free to check this link out. This is a beautiful thing. God, I love this filter. Absolutely crushed. Out of these 8 trades that were populated here, guys, if you took all of these trades, right, when the screener told you, hey, they're good, if you took it took me years to build this. If you take all 8 of those trades, you're net positive 100% on your account. There were 2 losses, and they were negative 0.14% and negative 0.21%. CXAI popped on my screener for a total return of 94%, INPX 30%, Prax 5%, and a few others. So this screener's so crisp. I love it so much. I dropped that link in the chat. You can click that link to see what I'm talking about here. Or I could just, I guess, share the screen just so you could see. Just so you know, I'm telling the truth. So as you guys can see right here, these are the 8 picks in front of you, right? So 94%, 31%, 4.4, 4, 2, blah, 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 and then 0.14 and 0.2. I only ever, there's usually 20, 30 results. I only take the top 8 because that means that they are the closest to the parameters that I set in the screener, which tells you that that's good. And I think all of these have the potential for continuation on a breakout as well. So going back to the chart here, we're going to cover a couple more things. What time? Oh, we're at 8:11. We are at 8:11. So for those of you that are new to the stream, if you didn't go to the Discord yet, go. We got something special for you. There's a channel called Join Support. I want you to go ahead, you click the disclaimer button, you go through that, and then I want you to go to this channel and just say, hey, Quench, send me from the live stream. What can you do for me? We got something special for you. We're going to hook you up. I appreciate you guys joining and checking this out. I know a lot of you are the longtime OGs. We're married at this point, but we occasionally get a few newbies that kind of struggle in and hang around, and I absolutely love and appreciate it. So basically, that's our small cap stock pick. Couple of charts I wanted to cover quickly. Actually, no, your guys' charts. Let's see it. All right. If you wanna look at a chart, type it in the chat. Now's your time to shine. Drop the tickers in the chat. Just drop it. Hey, and pay attention. If someone else types the stock that you want to see, just disregard. Or actually, no, type it, because then if I see 10 people with the same stock, then we're going to cover that one. So go ahead, type the tickers in the chat. Drop a comment, leave the tickers in the chat so I know which ones. I'm going to give you guys just a second to type those in, and then we'll be looking at the charts that you want to see, doing a quick analysis, and basically giving you a yay or nay. Derek Phillips, welcome, my friend. I hope you join us in the Discord. Again, free trading education. Then we got so much to offer. We will get you in ship shape. If this stream made sense to you, then I guess that's proof enough that you're going to crush it with us. And I'm glad you're here, man. Hope to see you every week, baby. Trade with us. All right. Guitar Jeff. What kind of guitar do you play? Casey Page. BLT. Yeah, we'll look at that one real quick. So I could run through these. This one's just easy because I've looked at it a million times. Again, what you see here drawn on my screen is my expectation of what will happen. We're going against long-term resistance here, which means we haven't broken that point yet. Our long-term load the boat entry point is $10.30. When we break above that, I think that's the pivot point where this chart really turns over. If you look at it on the weekly, we have so much upside here. Move to 12 bucks is imminent. We have a range right here at between 10:30 and 7:15. We need to stay above 7:15 and below 10:30 until we test that resistance and break above. We have a liquidity zone right here, meaning that price moves very quickly through here, and we haven't had enough price discovery for this to consolidate, which means that buyers and sellers are going to be confused here, and they're going to be able to move the price wildly because it's in the liquidity zone. So once we break above 10:30, then we're aiming for 13 bucks. Over 13, all bets are off. I think that very realistically, this could go to 20. We got the leap alert out there. I think that's going to make a lot of you very happy. I think it's going to make some very happy campers. I think you guys are going to make a lot of money. Demetrius, I did not. Nikki, is Nikki here? Did you see it? Go ahead and type it one more time and I'll copy paste it, buddy. I appreciate you reminding me. I didn't want that to get lost. So let's get into let's look at JP Morgan. That's what you want to look at. Let's do it. And type your email in the chat and I'll save it. Whoa. Jeremy P. Morgan. They had a good week. They had a damn good week. Wow, that's a lot of strength on somewhat significant volume. I mean, it's not crazy good, but it's good. That's a hell of a move. So it looks like we're back into that trend channel. So you got bottom side 130, 140, 138, 140, top side 148, 150. I think that if you're a long-term holder of JP Morgan, which again does pay handsomely to hold this long-term, obviously, and one of the strongest and most well-positioned banks in the American economy. So what I think we very well could see here is once we break above this little resistance we have here, I think that this thing could be primed for some 170 calls. Nice move to the upside, $10 move. I don't like buying in the middle here. The buy on this one was about 135, aiming for the 145 call. I think that would have been a good play, but we missed that entry because it moved so quickly. I would watch this one very closely. Again, it gapped up. That's huge. It needs to stay above 133, 134 to continue on the upside. But it looks like it's reclaiming its range right here, which means that I would kind of adjust support to 134 because if it stays above 134, it means it's staying above the past resistance and it's also staying above the most recent support, which means we very well could see a nice move up to 150 on JP Morgan. So there you go for that. Demetrius, drop that email one more time, buddy. I didn't see it in there. Or you could just send one to just send an email to that one I just put right there, buddy, in the chat. Just send an email and say, "Hey, I'm Demetrius from the stream. Quench said I got a free trial. Sign me up." Blah blah blah. Okay. Doctor AT&T. What? AT&T. Dude, have I lost my mind? You mean T-Mobile? Oh, wait. Dude, are they the same? Oh my god. I feel so lost and confused right now. I'm crazy. For some reason I thought AT&T was gone. Or maybe it's just because I only think of T-Mobile. I don't know. I don't even remember if they're the same now. I feel like uncomfortable with my existence at this moment. If you could see my face. It like scares me. I don't remember. Something wrong with me. I've been lost. Again, another bullish reversal chart here. This is absolute madness. The market really has picked up, which is why I said I think we have some strength here. However, this weekly chart tells a different story. You have upside at 21, but again, this thing never moves. So if you're a long-term dividend holder, I mean, it makes sense on the daily, but the weekly does not. I think you're like max upside's 21 here until you get above this 22, 23 bucks, which seems to be a nice range formed right here. If you see this, like it's got a nice bottom here and then top of range right here to about 28 bucks. Get a nice 20-30% move. I would wait until you see a breakout above that 22 and support hold, because then you got a nice trade with like a $5 to $10 window for upside. Other than that, I really wouldn't look at it too much. Amir, we already did Google, my friend. If you missed it, this is recorded, so as soon as the live is over, you can go back and watch it again. Cloudy Farms Genetics. CXAI. That was one of the ones on the scanner. I don't know if you saw that, but that thing absolutely ripped or popped on my screener. Sorry, and that thing was up a crazy amount. I would be very careful with this. This is a hey, everybody's going to lose money here kind of chart here. Went from nothing to 21 bucks and is now sitting in no man's land. So basically, because it's sitting in no man's land and we don't have really any price data, look at this monthly chart. It goes into existence, does nothing, and then goes to nothing, and then goes to like, what is that, 2,000%? So this I would be very, very careful with. This is an extremely risky chart. If we dial up, oh my God, it went as high as 70 bucks. Are you kidding me? That's insane. On how many shares? 500,000 shares? Oh my God. I think realistically this is going to come down to $7, at which point it might be worth throwing a nickel in the pie and seeing what happens with a very tight stop, because again, you can lose your money very quick. Or alternatively, if it breaks out above 15, then yeah, you might have a shot at this. But I would keep a very tight stop. This is probably going to get halted and you can absolutely get destroyed. It moved in after hours, so not getting halted. But this is an extremely risky trade to take. If you feel confident and you've been scalping for a while, then by all means, over 15, it looks pretty crazy. Micro float, my God, yeah, that's got to be. I got to check the float. I just have to know, because that's just insane. I got to look at this really quick. The float on this. Yeah, I saw that on my screener and I was just like, oh my God. The float's not even, it's like a million shares at $1. So it was like worth like, oh my God, $1 million. And then it was worth 600 million. That's crazy. So like, think about that in terms of the scope of a company, right? Oh, what? All right. I guess they played that. So, okay. Well, all right then. Send me a screenshot of that. I'd love to see that. That's absolute madness. Let's do PayPal real quick, and then we're gonna wrap it on up. PayPal had a pretty good week. I think it's going to fall in line with fintech and banking. There we go, primed and ready. Look at this on the daily. This thing has been consolidating for a long time. What we are waiting for, again, look at that green line right there. We need to see this break above 90 bucks so that we could take some long-term positions aiming at 150 to 180. I don't want to be buying down here to try and scratch out a couple extra percentage points when the risk is a lot higher. That's why we're not doing that. We've already bought our equity at 69. That was the perfect entry, or sorry, 67 to 69. That is the perfect entry. We traded up to 88. I think we're going to push back up here, trade up to 90 again. We need to break over this 200-day EMA, this bright green line here. You can put this on your chart. It's easy. We need to trade above that so that we can get a long-term position going. We have a huge gap fill opportunity right here, which means I think we can break above this point right here. Then I think that we are going to easily see a move back up to 150 bucks, which means that gives us the opportunity of a $40 move in the stock price. So a 50% move in the stock price, which means our options trade will go up a couple 100%. So I'd much rather take a couple 100% win than try to get a couple extra dollars here by buying super low when we don't yet have confirmation. So that is PayPal. That is a huge opportunity. And last but not least, we're going to finish with Thessalonius Jackson. This one's got a pretty contentious chart. It's following right along with what we expected here. We wanted to see a little sell-off. We're getting it. And then what we're going to see, I think, is a little consolidation continued in this range. We have to, once again, all these charts look very similar. Have you noticed? This 200-day EMA is looming. It is hanging around above our heads. This is at 205. When this breaks above 205, we're gonna take a substantial position on some at least $250 leaps. I'm probably gonna shoot for 300. I'm gonna kind of layer the buys and layer the position so that I have a 250 and a 300 strike, less risk, less return, more return, and then trade those shorts as we hit resistances. But I think we have a great opportunity to make a killing on Tesla. If you look at 205 right here, 205 to 2010, which is where our 200 AMA is, it coincides with the past bullish range, right? Where 205 was support and then 300 was resistance, which means it's going to trade in that range again. And we're going to capitalize on that and make a stupid amount of money on this trade, in my opinion. So make sure you stick with me and follow along. We're going to be covering it every week. And as always, I appreciate you all. If you haven't hit the thumbs up, hit the like button if you felt that this was helpful and you got something out of it. And that way we know to keep doing it. I love y'all. Stay blessed now.